looks like a little more quiet day of trade compared to what we saw yesterday. Of course, 2% hike on crude from yesterday's closing is also giving in a little bit of discouragement to the key indices. Let's take it straight across to Dhananjay Sinha, who's the co-head of Equities and head of Research Strategy and Economics at Systematix, joining in. Dhananjay, pleasure talking to you on NDTV Profit. What do you make of the markets which are really controlled by the overseas uncertainties and also the movement of crude oil? How would you really look at the market at the current moment?
So I think there is a lack of direction. Clearly, the conviction has been lacking. So one day there is a up move, the other day, the next day it sort of fizzles out. So there's a lot of sentiment that is impacting the market. I think the broader context is that the market does want to recover, but I think the fundamentals are not as supportive. I think there is a lot of uncertainty with respect to how earnings would move, how flows would move. So these are the things. So I would say the fundamental thing that people are watching for is what happens to the margins of companies and profitability in a context where the government has allowed increase in fuel prices for petrol and diesel. There has been an increase of almost like 7 to 7.5 rupees for both petrol and diesel. So that is something that is weighing on the market's mind. Effectively, it would imply that inflation would move up, and as a result of that, the interest rates would move up. So I think, especially the interest rate sensitive sectors have been somewhat vulnerable to that development. And I think the broader context is also that the market is looking at the overall context of what happens to the supply side beyond just the increase in cost of raw material. So there are supply side concerns that are also sort of visible across various sectors. So I think the uncertainty regarding earnings, margins, etc., will play out over a period of time.
That's
so I
right.
think that's the dilemma the market is in.
That's right, Dhananjay. A large part of that is still getting baked into the market. So at this point, with the kind of series of price hikes that we have seen in fuel, including CNG also, and the way the inflation is being seen on the ground, this could well be a full quarter of impact of the uncertainties coming in on account of the war in Middle East. Now, when we talk about this, how have you really segregated the sectors and themes basis the new reality right now?
So I think one thing is very clear is that there's going to be an increase in inflation. So people are still fairly sanguine, I would say, with respect to projections on inflation. So we think that we have already seen the WPI inflation going up to almost like 8.4% for the month of April. The CPI remains at 3.5%. We think that as months go by, we might see the CPI inflation around 6-7%, and the WPI can go beyond 15% as well. So I think that is something that will pan out, and as a result of that, we think that sectors that are exposed to increase in rates. For instance, we did this analysis for the banking sector in particular. We saw that over the last, I would say, mid-2022 onwards, irrespective of whether the policy rates are rising or falling, the margin, the spread, interest rate spread for banking sector has been declining. So that, with the increase in the interest rates by RBI, somewhere around 50 basis points is what we are expecting as of now. There can be sort of further squeeze in the spreads, and we have seen that the pressure on spreads have been there, notwithstanding the fact that banking sector is seeing a significantly elevated credit deposit ratio, and that's not translating into operating profit. So I think banking is something that we are closely watching. It will have an impact on NBFCs and the non-banking financial companies as well. I would say, companies that have more floating rate lending, for instance, HFCs, housing finance companies, and banks who have more deposit, they will be better off. Likewise, I would say real estate, etc. So I think we'll need to be very selective in terms of stocks and sectors. We think that defense is one place that can do well. Renewable is another place that we are sort of looking at more with a lot of interest. Batteries, etc. So those are the sectors that we are looking at. Yeah.
All right, green side, battery as well as defense are the positive areas, and interest sensitive areas have really now come into the play as a theme, as the increased expectation of RBI probably increasing the rates, looking at the growth as well as the inflation. Thank you so much, Dhananjay, for all your insights on the market. Great chatting with you. Thank you.